All right, all right, all right. Let's get it, baby. All right, this is Sauce Factory Wednesdays. It's your boy, Thanks Neo. And today we will be talking about risk management. Why you need risk management, how important is risk management, and how it will keep you in the game longer. The number one problem is people don't got no risk management. Okay. Uh see a lot of traders come in. Yes, risky business. Uh I see a lot of traders come in on a regular basis and they blow their accounts. We got funded traders, we got just option traders, forex traders, but the same issue across the board, no matter which market you trade, even crypto traders. People can get into trouble, but they cannot get out of it. They have a hard time getting out of trouble. They don't recognize the signs when the trade is breaking down. They don't understand, like, hey, it's time to go. Hey, this is a bad idea. Hey, I'm over leveraged. The risk versus the reward is not there. Risk management is a major component about trading. That is the number one component that you need to know before entering the market. What is your risk? How are you going to manage that said risk? Mismanagement of risk cause you to lose money. You will be bleeding out the back end for several months, maybe years, not understanding your risk is off. If you losing 60% on a position, but you're only winning 30% on that position, you are not going to balance that back out, right? You need to be winning 60%, losing 30%. You got to flip those numbers around, right? So you got a 1 to 3 trade or you have a 1 to 10, right? And if you're not balancing that out correctly, you can be losing a lot of money. So you doing a 1 to 1 or a 2 to 1 where you losing two, only making one, you can really blow your account very quickly and not understanding how much you actually have to blow. A lot of recommendations, a lot of wise traders always say, whatever your account size is, trade 5% or less. I know some traders only trade 1% of the account. Even when it come down to funded brokers are a little more stringent with their rules. They have certain amounts. You got 25K accounts, 50Ks, 100Ks, right? And up 300Ks even much. The key is understanding the stop loss. How much can you risk? How much you willing to risk? Where is a perfect stop loss and not just getting nicked out the market? And say, hey, if I can afford this trade, I should take it. If I cannot afford this trade, I should avoid the trade or at least look for opportunity where I can afford to get in at a reasonable cost to my account size. If you are over leveraging in the market, that's the fastest way of getting knocked out the game. If you can get lucky here and there and probably take a position, win a couple of times, but when you do lose because you put more up than you can sustain, yeah, there you go. Because you remember, to get back to even tilt, you must take the same risk. So if you cannot take that same risk multiple times, then you lose the game. So you take a large risk the first time, say you risk $1,000, right? Cool. But what happened? You lost that trade. You lost 500. So now you only risk $300 because he's like, man, that was a lot of money. Let me risk 300. Well, it's gonna take you way longer to get back to what you lost, risking less money. You gotta nick and dime your way back up there. Can you do it? Yes, but it will take you longer. You cannot risk 1,000 and lose it, and then use 100 to nick and dime your way back up there. That's lopsided risk. So we're gonna look at a couple of charts. Look at some grade A setups. The market been overextended on the high side lately. It's been a very bullish market, and I'm seeing a lot of bearish activity taking place. So we're gonna look at a couple of charts. I'm gonna explain to you what's good risk management, stop loss placement. Say, hey, I'll put my stop loss here. Yes, these charts are currently, the stock market is currently closed. We can slide over to the future markets, but we'll be dropping out lower time frames so we can kind of get the ins and outs of what it's doing. But right now we got BAC up, Bank of America. We're gonna go over this chart real quickly, and then we're gonna move on to a couple of other ones. If anybody else have any charts inside the wheelhouse they want to look at or want to break down on a higher time frame side, you can put them in the chat. I will look at them, but I have a strong list. So let's get cracking, people. All right. So first up, we're on a daily chart of Bank of America, right? So as you see, we've been in this nice little uptrend, right? So you're gonna plot your uptrend from the bottoms. Okay, you want to swing these bottom steps, right? So you want to slide across those. You want to make sure they touch. Let's zoom in so nobody get no ideas. Like say, hey, I don't recognize this, right? Blah blah blah. So as you see, right, it's sliding across. That's showing you the trend. Okay, we've been a nice little uptrend. Now we came up to a form of resistance here. We get hit this high here, 38, 36. Okay. Now from there, price start going sideways. Let's bring back our oscillators. We got our squeeze and our swing and our MACD. These oscillators I'm currently using. If you look at them, all of them in bullish territory, right? But the thing about it is, my squeeze was giving me notations inside these red bands telling me that's in the screen point. But right here, it starts separating from a Hall MA, right? Once it starts separating with the indicator telling me like, hey, it's getting bearish sentiment coming in. Boom, I'm seeing the red indicator on my swing. Boom, and I had a crossover on my MACD. Boom, right? So let's put a little, I'm gonna draw a little box, well, a little circle right there showing you the crossover. So later on, y'all can see that reference, right? Boop, boop, boom. And it's letting you know, all these signs letting you know momentum is shifting. Okay. A lot of times people don't see these little signs. These are little knickknacks. They're giveaways, right? Of when momentum is shifting. When momentum starting to shift, and you can see it right here on the histograms of the MACD, it was already shifting downwards here and over here, right? So you got sideways price action at a high after a nice run from the 14th of February, right? So Valentine's Day, they say, hey, we in love with the banks, we running. So they made a nice run up. At this moment, it was bouncing off this trend line, but guess what? It broke down, right? But we been had our telltale signs. MACD giving it up, got a nice crossover on this after this yellow caution candle, right? Told us, hey, this is kind of janky here. Boom, came down. We got the change of character, right? Once this notification popped up with the algo, guess what? You had a little pullback. So we already have our confirmation say, hey, this thing is breaking down. Great. How would we get into this? How would we play this? What is the risk management here, right? Okay, let's hide the oscillators and get back to the chart. So what you want to look at is, I like this drop, but we need to understand this pullback. So you'll say, hey, this is the high. I'm going to target, let it go down. If I miss the breakdown, it's fine. I'm going to look for another entry. So let's say you just happen to be rolling over on the 5th or last week, Friday, and you see this drop down. Okay. From there, you can see price pull back up. It made a 61% retracement. Good deal. This is your high. So anything should tell you my stop loss should be at the high. I would like a 61% retracement, so my stop loss will go here, right? It's the high, it's the 100% mark on the Fibonacci level, so they should not take that out. That is a 67-cent risk. Now, from there, you can just go ahead and run your risk downwards, right? So in most cases, we trade in futures markets, I would be trading the negative 27, negative 61% level, right? Let me move this back. I grabbed the wrong piece. All right. Nope, definitely grabbed the wrong piece. All right. Bam. So I'll be looking for a trade here, but this is still a 2-point move just to return back to these said lows. So I'll be looking for them to sweep these lows right here. Market liquidity sitting there. I love for them to sweep them lows. But in most cases, if you don't, you want a more calculated risk, a calculated target, you can always run your fib extension from swing point high, low, back to the pivot point high, which is here. So from there, you can target your Fibonacci sequence, 100%, 127, 144, 161, right? You say, great. Now, remember, you're only going to risk 67 cents here, but you're already looking at a 2-point move. That's going to cover you more than well enough, right? It will cover you greatly. So your risk reward is 4 to 13. So they like to say, see right here, these tools even tell you risk to reward ratio 4.3, right? So you risking 4 to make 13, right? That's how it kind of breaks down. But needless to say, this is what you're looking for: small risk, high reward. That's a great deal right there, right? And look, it lines up with your low. So the 144 fib extension or the 161, you can say, great, you want to go there. I love to take you there, right? But these are the opportunities. Now, if you get more than one contract, you can actually scale out each and every time it goes down. So you can say, all right, this one trade, boom, I'm put on another one. And I say, well, once I get here, okay, great, I'm out, right? And then you say, well, I'm gonna take this one from here to here, so forth, right? You can keep going pushing the tempo down as price fall. You can be scaling out of your position, leave some runners. That way you can maximize the trade. But this is the type of risk management you want. You want to wait for a pullback, a weakness in price, and then you want to attack. Now let's go down to a smaller time frame because I know everything looks sweet and dandy on the daily, and you'll be like, man, how would I know when it was really breaking down? So let's go down to our chart. Because you're looking at a daily chart for entry purposes, you want to go down to the hourly. That's how you can get that little micro moments, right? Boop, boop, boop. All right, let's get this off of auto because that's exactly what it was doing. All right. And here's your trend. There you go, right? All right, let's get rid of this box. Keep it clean, keep it smooth. So as you see, price is running up, small little dip. Wasn't quite ready yet, right? The swing was still retracing back to the zero line. So the moment it got to the zero line and failed, same thing with your MACD, right? The signals are there. So you see it's weak momentum going up, right? So as soon as they put in this bullish engulfing, weak momentum, watch the candles, right? Watch the candles. We had a pair order sitting right here. Boom. So they came back into the zone here. Great. One time test, reject. Next time they got in there, doji, and just gave it all away. So you're gonna wait for that weakness. You already know it's weak. You see the oscillators in bearish territory, the swing is in bearish territory. So when that happened, you definitely know you're on the good side of things, right? MACD was not doing much of anything, was very faint. So once you see that candle stop playing around and you see they made multiple attempts at this level, they couldn't get past that, you can shoot your shot. Reality, you can go short here. Once you identify setups like that, you can actually tighten up your risk management. You can say, well, to the top of that high there. If anything, I like this high, but I take this high for a quick setup. Let me see what happens, right? At best, you would have been in a what of a drawdown, a 16-cent drawdown. Your data contract probably would have went 5% negative, if that, right? If you getting something at the money, Bank of America, cheap stock to play, you can get in the money at the money contracts all day for little or no change, right? So you can actually take that said risk, calculate it. I know for sure I'm going to risk 45 cents here. I'm not going past this or this high here. 67 cents at best. I'm not going past that. If it goes, cut the trade, wash your hands, go away. Bada boom, bada bing. All right. Smooth. But that's how you would have played this position. That's how you would have got in it. And now you can manage it correctly. Just let it stay smooth. Watch the hour chart. You see how the MACD is dropping, but it's setting up for a retracement right now. You got something falling on support. It took the lows. Let's zoom in. All right. So it hit our 61% retracement, swept the lows. Great. It's forming a little base right here. That's fine and dandy. Because price, can I go straight down? Can I go straight up? It's already made a parabolic move to the downside. Now trying to rebalance, probably rebalance price. Pull back a little bit, shuffle, shuffle. It's still gonna drop. You can go to your 4 hour and say, okay, what the 4 hour do? It didn't put in no harami. I got another cross down. You see how it went flat, and they say, hey, we know we're gonna go more bearish, but you need this swing to get below the zero line. Once that swing get below that zero line, it's murder. She wrote, it's over. It's over. It's over. I'm leaving. I'm gone. It's over like that J. Cole and Kendrick beef. It ain't getting nowhere. Okay. Apologies accepted. You feel me? That's how over it is. So you just gotta recognize these little things like this. Boom, boom, boom. Bada boom, bada bing. That's the risk management for this said trade. Now let's go over to our next chart, which is Home Depot. Okay, I seen a Sophie in there, so we'll go check that out. Okay, let's go back up to the daily because we want to look at these daily time frames. Mm-hmm. All right, we got another high flyer, right? This is what I love about the cheat code algo. It give you the change of characters. Once you start seeing these, it gave you the breaker structure. But this is what I was telling you earlier. Pair orders. No way this should have played out like this, right? You had a nice little blow off top. Boom. Next order came in, swept it. Right? Said, no, we ain't doing all of that. Technically, it closed as an inside bar. So that's your bearish Harami letting you know. That's identifying like, hey, this is a bear setup, right? Once you identify pattern candlestick patterns like this, you know, like, hey, this is what I need to do to play this. Okay, smooth. Now, if you see it here, it had a one pivot point. Boom, price came up. One day green, next day red. 1, 2, 3 days red. One day green, next day gave it all up. End of story, right? So you'll say, well, how can I see that? How can I spot that? What could I have done? Remember, at the dividends, okay, that start putting in bearish signals all day long. MACD crossed way back in yonder, right? Way back here, crossing down. And that also set up the bearish divergence, right? Look at this. Boom, boom. On the histograms, let me put my little line there. Bing, bing. See a little slope. But what price was doing, right? At the exact same time, price was going upwards. So you see the disparity in that, right? Price going like this, momentum going like this. Boom, boom, boom. Momentum's going down, but price going up. That is a bearish divergence, a regular bearish divergence. It set it up perfectly on a MACD. Okay. You pay attention to these setups as you see things going like, this is fake. This is fugazi. This is foo-foo. This is blah, 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 right? I don't believe you. Why are you driving price up? You just swept a high. Now you're coming up to jump again, right? You did a blow off top. There's a lot of price action. That was a trick of the traders into taking a bait so they can do the rug pull. Once they pull the rug, guess what? Drop, 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 drop. Now people got to cover their short position. So that was the one day of green, but they say we got more to go. Hold my beer. This how you can tell. Once again, you go back to the MACD. Look at this high here. Okay. Price failed to get back up there. Price went here. Boom. Stop shy. And then continued on down by his business, right? So multiple things you could have done here. If you didn't catch all of this price action here, you could have came here, waited for the pullback. Okay, I seen some pullback. Everything is straight bearish. That's fine and dandy with me. So I want to go fill from the high. Say, okay, great. Drop down to the 1 hour, seeing what I got. I need some type of bullish activity to say, hey, this is me, all me. I'm taking it, right? Okay, great. We got to pull back, pull back, pull back. Oh, it's setting up. Couldn't quite get there. You know, like, okay, you can possibly go short here. Me personally, I want it way up here. If it's the going, a little janky right here, I'm not going to take this trade. I'm going to avoid this. Why? Because my risk management is too far off. Where can I honestly put a stop loss? Less than a 23% retracement is not a good setup. The risk is too big. Why is that, Neo? Well, if I go short here, anywhere in this window, right? Let's say we got it there. Well, we ain't that perfect, so we're going to be down here. My stop loss need to be way up here. That's a $36 stop loss. Where's my take profit at? Well, we're going to go for the easy one, -61. Well, it's only $30. You telling me I'm gonna risk 36 for 30? No, I'm not. That's a terrible idea. I'm not taking that trade. It's no money in that for me. At best, what if it hit the negative 27? Well, that's $16 profit target, right? I need a better retracement so I can get a more bang for my buck. So you telling me I gotta overpay for the contracts, then I gotta overreach on my stop loss. Then on top of that, I can only get this much in return. Bad idea. Don't take the trade. You simply wash your hands with it. Say, well, it looked nice. Too bad I couldn't get it back on the 27th of March. Oh, well, keep it pushing. Keep it pushing. Don't take the trade. Let it go. Believe me, it's not worth the trouble. You overpaying on everything. It's overextended. You overpaying, too much risk. There's no way to make this reasonable at all. Unless you can get it like, oh, I'm right here with it. But if you're looking at it, you still in retracement territory. 23% is not a good retracement. I need a 50 or better. That's a great retracement. Yes. Yes, it did. It went up there like high blood pressure, Tiffany. Yeah. So looking at all your oscillators, it's ready. This swing was in that green box telling you, let me breathe. It wanted out. It wanted to go up. It wanted to go off. So you have to be mindful of it can be in a potential reversal zone. You never know. You don't want to get caught up in this stuff. You don't want to get smoked out. So you don't take the risk. You simply say, well, great trade. I'm done. Wash your hands. Whoop, whoop, I'm out. Cool. On to the next one, right? But that's how the cookie crumble. If it decide to put in a better retracement later on, a couple of months from now, cool, take it. Not, oh well, chunk it up for the memory books. Just put a note, set an alert, say catch me on the next one. So that's Home Depot. Now let's get over to this good old appleization. Mm-hmm. Yeah, let's go take a bite out of apple. Then we're gonna go back to the daily chart once again because we rocking on these daily charts. Bada boom, bada bing. Now, this is the thing. A lot of traders don't recognize patterns that the market put in place because it does it on a regular, consistent basis. So you see, we currently in this downtrend, but do you recognize what happened over here? Okay. So this is something I love doing. I get a kick out of it, but there's drawing these patterns out, right? I'm like, okay, great. Boom, boom, boom. Okay. Huh. I wonder. Clone. What happened here? SOS, right? Only slight difference is it went up a little bit. It was shy on this drop. Okay. You can go ahead and say it done a little sun here, a little pivot, but almost the exact same pattern. It got a little more humps on it. But it did what it did over here back in 23, right? October 2023. It did it over there. Now, guess what it's doing? SOS. Same old thing, right? It created that little down channel. Boom, exploded out. We back at the same level here, right? So either we're gonna give it up or we not. We're gonna go run some highs. So you gotta ask yourself, if I'm going short here, what is my best option? Where is my risk? Let's clean this stuff up. We don't want to have all this junk on the chart, right? What is my risk management? Right? What do I see here? Now we've been tracking Apple for a while now as a community, so we can easily bag out to this weekly chart and see what do we have here. Oh, wait, we got a nice little M pattern. Look at that, right? Or better known as a double top. Okay, double top. Boom, 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 boom. Okay. Now, how you measure a double top? You go from a high, from resistance to support. That's a negative 32-point drop. So we're going to slide that number right down here. Boom, plot that. Okay, smooth. And then that's going to be our measured move right there, right? So I'm looking at a target of 132. Great. Now, I cannot take this target. I love to start shorting right now, but we got to get out the breakout. If it don't break out a 161.66, guess what? It's going back up, my boy. It's going back up. So let's get back on this daily chart. Look at this. Now, I can go short here, but technically that is not a double bottom until it breaks out. It got to break out. If it do not break the support, it's not a double bottom. It's just a chart. Okay, so you don't want to be trying to pull muscles, trying to make a chart something it's not. If it's potential double bottom, great. It's a potential double top, cool. But it's not until it breaks out. So I cannot trade this until it break out of 165.66. And I preferably want some power. All right. I know I got 32 points here. So at that moment, I know for sure you better go. You better give it up. And I want you for everything you got. Now, in most cases, when you get a breakout, you can really go for the last one previous candle before, because it should go down there with force. And you got to look at what you can do. You're going to looking at 33 points. You can risk $5. Or you can go up to this high here. Me personally, I wouldn't, because it should break out. But if you need to, for safety, that's a 13-point pullback, right? That's a 13-point stop loss. Boom, to the last high. So once it breaks out, great. But most breakouts, they are done with force. A lot of volume comes in and they blow through those levels and they get the boop, 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 snap, 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 right? So you don't really have to worry too much. So with breakouts, I want to go to the previous candle. So let's zoom in because I know they don't look all that, right? Candle's kind of small from a distance. So I want to be like right up in here. I want to be on this candle because that candle should be, my next candle should come somewhere in here. So I want to be like right here. I don't want to risk a whole bunch on a breakout, right? Breakout should be strong, powerful, and fast. They should go boom, go running for the hills, right? That's what you want to see. You don't want no fugazi breakout. You want a full-on breakout. When the cheese sliding, the cheese is sliding out the cracker, right? So you let that go and here go. Bada boom, bada bing. So that is Apple. But you watch these signs. You always chart, pay attention to the patterns that the market is putting in place. Once you see those said patterns, you take advantage of them. Now, what also could be forming, you could have a falling wedge here, right? Who knows? We don't know until it do what it do. If then what? You got to ask yourself these questions. These questions you ask yourself, right? Boom, 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 boom. Technically, it bounced there first. Right. I want to get 2 more touches. And there we go. So technically, we could be having a falling wedge form in here. What happened when those drop? Right? Those are bullish reversal patterns. So if it don't break out, yeah, Shantae, you grab a parachute. You know what time it is. So if that don't play out, how you get the falling wedge, you go from there to last swing high, which is here, right? Boop. So that's 15 points. So let's say, what's our breakout point? Take that, slang that song gun right over there. Boop, boop, boop. So we can pull back. Measure move could be up here. So we in a very specific spot, very crucial point here, right? Either we can go long or we going short, big dog. What we gonna do? Right? So either gonna break out, run to the highs, Apple do what it do. You already know they got earnings coming up in May. So will that be the catalyst for them to go up? Will they introduce the AI, some new AI stuff like everybody else been doing? Will they admit they got the patent for the headphones? Y'all know about those headphones? Yeah, they got that patent out where they can read your mindset. Well, technically they taking the radio waves from your mind, building a pattern with AI to start, learning you better, right? I digress with that. But yeah, so what are they gonna drop to say, hey, we're gonna run up? Apple is Apple. At the end of the day, they got a nice market share, a lot of cash flow, great solid financials, so they can easily do what they do best. But will they let Apple's cheese slide? We don't know. Yeah. So let's keep an eye on that, right? But at the end of the day, you can say it's in a wedge or you're gonna break out that M pattern. We got an M pattern on the weekly, we got a wedge on the daily. Who gonna win? We don't know until it breaks out. that's what I always say. A pattern is not a pattern until it breaks out. You got to follow the rules. You do not follow the rules, it's hard to kind of use your risk management. It's hard to be low risk if you're not following the rules. If you saw the short Apple here, saying like, oh yeah, it's a double, it's a double top. It's gonna break out, 30-point drop, blah blah blah. I'm gonna get paid. I can get this, 150 contract. You know, on the money. I can get this 160 contract right now, and I'm gonna be paid. Da 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 da. And this thing goes sideways and then start going up, and it runs to 180, and you sitting there, with your face in your hands, looking crazy because you was too impatient to take necessary risks and precautions. You just did some stuff. So please don't be impatient because the impatient give money to the patient. Okay. The reason why some people have a endless cheat code on wealth because they are patient, diligent, and they understand their edge and they control their risk. You do not control your risk, you will have a very difficult time building wealth in this game. Risk management is number one. Risk management comes first. Without risk management, it's gonna be very, very hard to maintain these accounts because you may be over leveraging one trade, under leveraging the next trade. You gotta know your risk. You gotta take the exact same trade over and over and over and over again. That's how you know it works. You keep using that system until it breaks. You do not change the system until you say, hey, the system don't work. I ran it through the gutter. It's trash, blah, 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 blah. Everybody got a nice bag of tricks they got, but they got that one go-to trick that pays every single time, that prints money for them. So you got to have those in the bag. If you do not, don't know what to tell you. If you're not using your setups, you are not using your go-to plays on a consistent basis, how do you know they work? You won't know because you don't have enough samples to say, hey, this works, this do not work. So keep that in mind. Journal every single day. Triage. Every time you get done with the trading day, don't take over more than 5 trades a day. You shouldn't have to take more than 5 trades a day. It's not enough trades in a day to take more than 5, right? Once you're done, review the trade. Did you follow your risk? Did you follow all your rules? Was your setup there? And what can you do next time to make it better? Okay, so there you go. Next up, we're going Intel. Okay, because we gonna tell. TC. I heard they was kicking up dust. They had some movement to the dirt. Yeah. So once again, we got another little cheat slide. Cheat code gave the change of character on the internal and the external, right? With the breaker structure on the internal breaker structure, smooth. So 2 things you can do here, right? Breaker structure, great way of taking risk management. You know they're gonna sweep that low. Okay, great. Let that counter close. Your stop loss the last high. Your stop loss don't have to go way up here because it's a breakout trade. The perfect trade would have been up here on this boosty candle, right? When it retraced back into that boosty candle, that would have been the trade for you. But you late tardy to the party, you ain't showing up on time, and you see this little breaker structure happen. Chico told you that breaker structure is there, right? So you're gonna say, all right, bet it break that wick. I'm in that thing. Stop loss the previous candle high. $1 risk, let it go, right? So you can say, well, they can come all the way back down to 32. That's smooth. I like that. I like that for me, right? Or you can pull out your Fibonacci extension, run it down, bing, bing. Once again, 1, 2, 3 points of contact. Keep it smooth. You can do less than that. We can really get fancy with this Fibonacci extension, right? But I'm just gonna, we're just gonna keep it regular today. We ain't gonna go too much on it. I'll run down on that for you. All right. So looking at it, it's already at the 127 fib extension. How much more could you go? You go to the 161, 200. What do we have to stop it over here? So when you see a play like this going on and you see it's dropping for days, you had one green day out the whole entire week, last week, right? You're going to say, okay, look to the left. Will they go for the lows? We have a gap down here, which is great. I love gaps. That's a magnet for price action, right? They have a gap, so we want to keep an eye on that. So now we know they got a gap there. Well, I'm not going to be shooting for the low. I'm not greedy. You know, remember the saying, pigs get fat, hogs get slaughtered. So you don't want to be greedy and say you want everything. You want some of the things, not everything. All right. So you got 200% right here. Cool. Right at the gap. Let's find and dandy. So you can go 161%, or you can go 200. Totally up to you, right? But I like to see what happened when getting in a gap. Now we do have an order block right here, 3 candlestick order block continuation. We had that right there. Boop, boop. Right at your 161 extension. So if I'm already been in the trade since back here, right? So let's say even if you waited for that candle to close and you wait for the new one to open and you take it, preferably wait for this candle to close unless it's just wait for the candle to close. Wait for this candle to close. As soon as this thing open up, or if you trading on a daily chart, wait till the last 10 minutes of the market. So you know for sure the candle gonna close bearish below that level. Then you can enter your trade. Or next day when it open up, you can put that wick in for you, get you a better price. So either way, right? But the moment start breaking down, you was good to go. So bada boom, bada bing. You know it's gonna go down there. So you're risking $1.50 for $4.09. That's a great risk to reward. I like that risk to reward, right? I would take that trade. I wouldn't take the risk up there. I'll take it right there. It shouldn't do more than that. If it goes above that last previous candle, let's know you smoked salmon, throw it away. Okay, you burnt the salmon, throw it away. It's over. It's over. It's leaving. It's done. It's gone. Bye bye. So that's the type of risk you'll want to take on that, right? Nothing too much, nothing too light. So these things you got to keep in mind when you're targeting the market. That will keep you well balanced with your risk to reward. Oh yeah, I'll pull it up, Tiffany. I'm pulling it up. All right, let's go for it. But that'll keep you well balanced your risk to reward. It'll help you capitalize your trades way better, way better. And you know for sure, I don't have to wait till the trade goes to zero before I get out of it. Now we're gonna pull up this very popular stock by a couple of members. I'll selfie. Boop, boop, boop. All right, we got SoFi here. You know, this once was such a promising young startup, very promising, but life happens. Life be life. All right, let's kind of, let's take this down memory lane because I remember back in 2020, I was told about this stock and it was like, hey, you should get in there. Great. They got all this innovation going on, blah, blah, blah. I said, heck yeah, let's go, baby. Let's go. So when they was a SPAC, I was way back in yonder, right over there, right? When it was $11, I loaded the boat. It went to a nice high of 28.32. When it got into the 20s, I say, son, I'm not greedy. I'm out of here. I'm gone. I'm leaving. I'm cashing out. Diamond hands no more. Let me trade in my diamond hands for the soft life. You feel me? I'm getting, I'm like, that's what I want to do. That's how I'm looking at it. Yep, that's how I'm looking at it. You feel me? It was a great company, a lot of promise. That's what it is. A lot of promise. And then, they dropped down straight to this $13 range. Now we came back. We are like, oh, it's back up. It's going back up $24. $24. Like, yes. Yes, SoFi. Yes. Yes, SoFi. And it stayed in this range. Just stayed here. I don't know what happened. A lot of promises. A lot of promises. It stayed there. It just stayed there for some odd reason. And it just couldn't get his life together. And the last time in 2021, and it hit that level, it just tanked. The cheese slid out the charcuterie board and it never got back home. 3-second rules. It was down there for 5. We had to throw it away. Once great company with a lot of potential turned into a dumping ground. Yes, a trash. It's trash, you know. And I was like, SoFi to the moon. SoFi lit. SoFi, SoFi. That's what people say, right? But, after looking at it and the failed attempts to ever return back to his former glory, I mean, failed attempts. Try again, right? I mean, it was tried. How can I express my feelings for this? There you go. Boom. There you go. Throw it away. It's throw it away. That's where it belongs. In the trash. Yeah. Yeah. I know, Tiffany. It's okay. It's okay. You're part of a great community. We're gonna wipe your tears away, and we're gonna get you back on the right path. But this is trash. They couldn't get a dividend off the ground. They couldn't get nothing. A lot of promise, a lot of hype. But once again, this is the reason why you don't bet on the long shots. You don't. You just simply say, okay, you had your fun. The moment it couldn't return, beat $11, we knew it didn't have nothing else to give. Only thing keeping it off the OTC market is the 647. If it can manage to ever break that, it's the OTC market is going. Discount section. Yeah, discount. Nobody want that. That's why nobody picked it up. It's trash. Now, could they do something? Don't know. It's just been sideways. What do they have to offer here? Fintech was a lot of hype, but just like anything else in this place, AI swept them. Say, oh, wait, we on AI now. We don't care about fintech no more. All these fintech companies went to the gutter. Okay, went to trash sauce nation. They took them, balled them up, swish, Kobe, trash. Trash. What's that? What's the upstart? Let me see. What the boss ticker at? Uphold, upstart. What's that? What the boss ticker is? Let me see. What I think it was something crazy. There we go. Here's another one. Another one. Them boys are $300, almost 400. They was 401. Look at that. Look at that. Trash. Trash. Oh yeah. Yeah. See, I said this 2 years ago. I said this 2 years ago, right? I said, I said, you telling me you're gonna do a deal with Walmart and you're gonna say, hey, yeah, you can buy now, pay later. Rent-A-Center been trying to get their money from these people for decades now. You gonna fall into that space? You really want that? No, sir. I said that's a flawed business plan. I said short them, short them. Come on now, 161. Look at them, $93. Yeah. These boys trash too. They trash. It was a bad business model. You gave broke people a lot of leverage. These people wasn't responsible with their funds in the first place. Everything you was gonna use that firm for and the upstart for was luxury items that you did not need. All right. So when you do that, guess what? You can over leverage yourself with vacations, TVs, electronics, game, blah, 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 blah. No necessities whatsoever. And then from there, once the crap hit the fan, the person who sold it to you, sold them the debt, didn't care. They like, man, we don't give a dang. We just take it, please take it. Everybody, mama was in Tulum. I thought boys had, had a second house in Tulum. How boys on there? Every time you go on the ground, somebody in Tulum. Like, was you there last week? Yeah, I decided to come back. Thanks to Affirming Upstart, you can front the whole trip. Yeah, 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 yeah. They had to start tightening up the budget. The things got tight. Yeah, yeah. That sweater turned into a medium. Start choking them right here. I said, we gotta figure something out. Mm-hmm. Yeah, boys taking them flights, not paying. Cause the airlines got theirs. But that's the reason why you gotta understand the risk. If you bought in up here believing in that fintech hype, you are bleeding out. The moment it swept this low and had that breaking structure, you go on here and cry and cut your losses. If you was up when it gapped up over here, you should have really cut your losses. Like straight up and down, you should have been out the game at 87. I would have got out, cried in the corner, cried in the car, cried in the Tesla like Jeff does. I would have cried in the car somewhere and said, oh man, why me? Why did I buy firm? Why? But yeah, I digress. Yes, that's my fintech rant. I had even took a class on fintech so I can learn more about it because I thought it was gonna do something great, and all it did was just disappoint me. I got the keynotes, the slides, and everything. Like, yeah, man, we're gonna invest in this fintech. Fintech didn't do nothing except flop. But I can't lead this. I can't get to the spot until I get to the last fools here. But I get these boys. They take money out my dang on thing on a regular. I still use them though. But where them boys at? Mm-hmm. PayPal. So where you at, PayPal? Come to the front. Come to the front of the congregation, PayPal. Look at them. Trash. They was great. Boy, I didn't believe they was gonna slide out they charcuterie boy, but they did. Look at them. Look at them. Look at them. Mm-hmm. Oh, 300. Trash. Trash. Down with the rest of them. That whole sector failed. It failed. They've been stepping down for a long time now. It failed. It failed. Mm-hmm. So this reason why you must understand what company is investing in. Oh, I almost forgot about one. Let's see if they ticker still SQ. Block. That boy run two companies and ran away. Mm-hmm. Yeah, yeah, yeah. That boy in Africa somewhere hiding. Mm-hmm. Yeah, yeah, yeah. I know where Jack at. Yeah. Two companies. Boss, well, for God, this thing was gonna do something. Mm-mm. Trash. I told him. I said, man, I don't know about Square Dog. It's setting up. Oh, buddy ain't that good. He ain't that nice. Jack ain't that nice. That boy tripped up. And if you look at Twitter and Block or Square, they fell around the same time. They both had the identical charts. They fell at the same time. Elon saved Twitter and turned it to X, and Block. Well, they building blocks right now. They ain't in the Lego section. Mm-hmm. They like them Beanie Babies. It was lit. Now they forgotten. Collecting dust in your grandma China cabinet. Mm-hmm. Yeah, yeah. So somebody asked a spy. So I'm going to spy real quick. I know I went on a little tangent right there. But yeah, I had to tell the truth about that SoFi and his friends. You show me five of your friends. Show me five of your friends. I'm gonna show you your future. I know y'all heard that statement before. Five of SoFi friends. He'll start, Affirm, PayPal, Block. Yeah, they all in the gutter now, ain't they? Got folk broke when you buying me to feel. Come on, I'm just saying they all in the same fintech industry. Yeah, yeah, yeah. Watch the company you keep, y'all. Watch the company you keep. Mm-hmm. Even the stock market got to watch the company they keep. You get in the wrong section, sector, it's over. All right, spot topping out. with the news, inflation going on, they trying to figure it out, what they're going to do. They don't know if they're going to drop the rates, raise the rates. This is going to be heavily dependent on the top 10. Will NVIDIA recover because they are heavy in NVIDIA? That's what's really been propping the market up, but the market have to cool off. This is out of control, overextended, right? Even on the weekly chart, look at that crossover. I've been waiting for this. I've been waiting. Look at that. Everything says, ugh. They got that, like they switched the ball. Y'all see that on the MACD? Mm-hmm. Yeah. I should have my camera on for this. Yeah, you see that crossover? Boop. They about to start pulling back. So we run a fib from here. This is a weekly chart though, so keep that in mind. It may take a while. So we looking at these levels of potential retracement. If they give us a 61 or even a 50%, that's for 67 minimum, right? So with that type of stuff going on, and we got more news coming back, yeah, I look for a 50% too. That'll be decent on the spot, right? A 50% retracement. Consolidation. Once again, I showed y'all this on the other charts that we went over today. Consolidation at a high plus momentum leaving out, they leaving out the party. Don't be the last one and leave out the party. You see everybody else ditching the party. Do not get stuck holding the bag. You see these boys leaving. Take a little bit, take a little chance, right? So we ended flat here. Oh, look, we dropped the whole point, right? So you get a pop. Remember, your stop loss to high. So currently, if you get in anywhere down here, guess what? You're risking $13, right? But if you take it to the 50%, that's a $46 drop you looking at, right? Or at least a $46 retracement. 46 points, $46, whatever you want to call it. But that's the retracement you potentially looking at. So will I risk that? And the great thing about the SPY is this. They have weekly contracts, daily contracts. They got almost quarter cent spread. So you can really get in and take advantage. You don't have to get it at the money. You don't have to buy all the time. That's nick and dime your way. Preferably, you want to buy time. You want to buy a couple of months worth of time, and you want to hold that through, right, and see it through and average in. But you can play this however way you want to. But we see what's happening here. If they don't do something, find your entry, take advantage, but use risk management, please. That's the reason why we having this call, is to learn and practice risk management. Risk management. Okay, people? Risk management. All right. So, somebody got Carfax, so I'm get one more in, and then shut it down. Do. Then after that, I know y'all like doing y'all questions online, so we're gonna plug in some questions after I stop the recording. All right. These boys humping over. Oh, yes, I did, sir. I did. I thought I more than covered so far, sir. If you missed it, just play back this recording. It will be uploaded in a couple hours. Yes. So, currently, I'm looking at this little nice little double bottom right here on CarMax. I like to see this momentum is still kind of dragging down a little bit. You have earnings coming up soon. Ooh, that's tomorrow. So I definitely want to see what happened here. You got a gap down, earnings coming up soon. You want to just watch. They did good last quarter, but they still kind of came into a downturn. So Sutton must have been off with the guiding something. They can't pop up like this and give it all back, right? So I keep my eye on this, right? But they've been here before, and they look like they like to reject from this level every time they get here. So you could be looking at a nice little droppity drop. So if they do decide to give it up, I'm target the 69, 65 range. That's a major swing low. So they take out this low, break down, boom, boom. If not, once again, you want to play it smooth. If it breaks down, keep stop loss above that candle. You're looking at 9 points. So risk 2 to make 9. Better 10, give or take, right? So there you go. That's my 2 cents on that. All right. So that's CarMax. And that is my time. So let me shut this and stop the recording. I'm gonna ask some questions and stay smooth.